Time is flying by quick, and we are getting super close to Q3 2024 earnings coming out on Monday for Palantir, November 4th, and that's just a couple days away. And this has a lot of attention from old and new investors alike, as well as a bunch of hungry wolves on the sideline just trying to figure out what the heck is happening for Palantir and their stock. So I already put out a whole earnings preview going over the last quarter's results and the presentation, as well as my thoughts around the expectations for this upcoming earnings. So check that out when you do have a chance. But this video here today is hyper focused on the crucial points that I believe everyone is watching out for, and if not, at least I'm personally looking out for. And these three shouldn't actually be a surprise here: revenue growth, customer growth, and guidance. And surprisingly, I'd say one is more leaning towards the other, at least for that revenue growth versus customer growth between longer term investors, while the other one is more in favor of short term traders. Although ideally both doing super well past expectations is important for the overall narrative over time. So first, for the short-term kind of revenue growth is no doubt going to garner a lot of attention. Last quarter, they guided for Q2 to come in around 22%, but when those results actually came in, they did 27% growth, a huge beat. Now for this upcoming Q3, they guided for 25% growth. So that's already a big jump here from what they were guiding. So what is the magic sweet spot where the market is going to be happy? I'd say best case scenario is as much as possible and above 30%, of course, while in all reality, at bare minimum, no matter what, they have to at least hit or slightly beat their own guidance and maintain that reputation of sandbagging. But I would say matching that 27% from the previous quarter or getting right above that is going to be important, at least for the short-term happiness of the market, because that clearly shows that the continuation of their acceleration of growth. And a company with a lot of it here can sustain elevated prices because the confidence of their success playing out keeps growing. Now, even if things don't turn out so rosy, relying on a single quarter to determine the long-term viability of a business with a huge AI wave in the industry trend going on is not ideal and not realistic at all when it comes to investing, unless we get a really huge bombshell. Hence why I'm saying a lot of the short-term minded players will be paying just much more attention to this too closely, and cyclically Q3 is technically a slower quarter, although that's why we compare it to similar last year. So revenue growth no doubt will still be an important big factor, and even though the flashy overall revenue growth will grab the attention, I think given some time to digest, the source of this growth will also be a big factor here. Commercial versus government is always on that comparison where, in my book, government is the sign of stability, and even if it grows slowly, I know it will be around. So any outstanding growth here is treated as a bonus. But for commercial, this continues to be talked about by management, as well as seeing new deals signed and all the great things we hear from current customers and positive news. So big growth here is supposed to be expected and not a surprise if they actually pull this off. So any weakness in commercial will be viewed negatively by short and longer term folks alike. Now, the other important metric, where in my opinion is much more important for the business itself and actually the narrative of the company, and the stock, of course, too, over time, is customer growth rate. It's obviously not as sexy as the dollars coming in right now, and from my perspective, they've already proven they're a money-making machine once they've gotten their foot into the door and got a customer signed up. Although it does take a bit of time here and patience for it to start flowing in. As a leading metric at least, this is supposed to be the precursor to expanding revenue growth because the model has always been touted by management that we show the value first, and then the deal will fall into place here and expand upon later on. This has basically been the approach ever since AIP came out, because with that wrapper, you've got customers needing their ontology, their foundry setup to actually leverage maximum value out of Palantir, and customer growth in the long term shows to me that they continue locking down new folks and actually expanding their footprint in the marketplace across different industries. It's all fine and dandy, of course, to expand your existing customers' willingness to purchase, but the hyperscaling and growth narrative around the business relies on them acquiring new customers, and the definition of customers is this recognition of revenue where even if it's very small like a trial basis, still technically counts them and it allows them to be added to the slide, which is why there can be an imbalance between revenue growth and customer growth over time. Now, I'm not predicting market movements, of course, too, or giving investing advice, far from it. These are all just my opinions. But if I were someone really closely watching the earnings because of short-term movement, the growth rate narrative is crucial for the fast-moving market, ready to justify if growth is truly there. This can be what allows a certain multiple to persist, expand, or compress, which can be explosive for a stock in Palantir's position, where we know their market cap is pretty huge relative to the numbers that they're bringing in today for their financials. Where even if customer growth is really awesome, it may not play out as nicely just because the revenue is not showing up. But thinking longer term, the customer growth is truly for someone who wants proof of their business catching up and gaining a foothold that they can expand upon and start compounding network effects. So even if things are flipped where revenue growth is not spectacular, but that customer growth shows up, I'd still be happy personally with those kind of earnings because the growth should be coming down the line, and Palantir is focused on getting value for those willing to sign up at this point. And ideally, this trade off between the two doesn't even have to happen. If both are spectacular, I think this will take everyone by storm because the best of both worlds showing up and this expansion of their business with new customers in addition to maturing customers is showing that earlier customers pulling in more revenue means that they have a truly scalable product. And not necessarily in the sense of technology wise, too. We kind of already know this, but scalable in implementation and flipping switches to bring in revenue much faster from customers. The whole idea of this isn't to bring on new customers and sell them a product that needs to be set up, but rather giving them the tools and ecosystem to basically get addicted to the value that Palantir brings to them so they can continue to expand their usage, which in turn leads to more revenue down the line. So as noted, that's the ideal situation, and when I see massive growth in both at the same time, that would probably be the point for me to think this is the truly exponential growth phase starting to show itself, but that's just my opinion. Now the other side here, guidance, that's the X factor here. We've seen plenty of scenarios over time where earnings are just massive and amazing and better than expected, but guidance is forward facing, which we know the market is all about. Just because you performed well in the past and you're reporting on it, if the expectations are dampened for the future or just way worse than expected, this can be what hits the stock hard. Now, I'm not saying this will happen. It can just as easily play out in the opposite scenario, granted the actual performance isn't horrible. If Palantir guides, let's say, for a 30% quarter, I think that would be massive and a literal game changer for Palantir's narrative and showcase the true turning point of growth, although the likeliness of this happening, I would think is small, where management will still be held to this, and it is kind of uncharacteristic too, considering the sandbagging nature that we've seen over the past quarters. But that's the power of guidance, where it can even overshadow negative results, although it will put management on the hook to deliver further down the line. So it really is in a ballgame of its own, in my opinion, and equally though still crucial for the narrative. But it's also not so bad if guidance stays on par with the caveat that they're doing stellar in the numbers above. So I'm curious to know, what are your thoughts on the upcoming earnings? Will they do worse, better, or do exactly as expected? Or more specifically, what do you think will move the needle in either the positive or negative direction for the company? You think they'll show excellent revenue or maybe revise guidance more positively? Or on the negative side, do you think they'll fall short in a certain category which hurts the narrative and possibly the stock that day that has been established so far with Palantir's foothold in the AI market? It's just interesting to know though what we think might happen. Let me know in the comments below, and I'll see you in the next video.